So throughout these next few videos, you'll begin to learn more about reading the different candlesticks and then gain the understanding for how they can help you to tell the story about what's going on in the market. Remember, in every market, there's an ongoing battle between both the buyers and the sellers. Now, the close of each candle is a potential clue, which tells us who is either in control or who potentially is gaining control of the market. So there's a bunch of different ways to read momentum for both the buyers and the sellers within the market, but the easiest and the most consistent way to do so is by reading the close of each candlestick. In my opinion, the close is the most important part of every candlestick. So let's start with the bullish candle and then dive into the three different sections that make up a candle. So when looking at any candle, we want to take into consideration both the extreme low and then the extreme high, because those are big clues to what happened within that time period. So the first thing we want to do when looking at a candle is to divide it into thirds. So as you can see here, we take the entire candle from wick to wick and then break it up into thirds. Now these aren't going to be perfect, it's more of an eye test, but the more you practice, the better you'll get. So once breaking into thirds, you'll see there's an upper third, a middle third, and then a lower third. So now to determine the strength or the momentum of the candle, we want to find out where the closing price is. So if we have a close in the upper third, it is considered to be a high momentum candle. Now if it's in the middle third, it's considered more of a neutral candle, and when it's in the lower 1/3, it's considered to be a weaker candle. So as you look at these examples, what I want you to think about is the story that goes into it, which tells you why this would be a high momentum candle. So the story of this candle, it shows us that the buyers, they closed it near the extreme high of where they once traded at during that session, which tells us there was some strong momentum towards the end of the session, and we can anticipate some potential momentum continue. Now, on the contrary, the further away from the extreme high that the candle closes, it shows us a lost momentum and a potential reversal is coming. Now, let's look at the opposite with the bearish candle. So once again, we want to take the entire candle with the wicks included and break it into thirds. So we have the same upper, middle, and the lower third, and now we want to locate that closing price. So in a bearish candle, we want to see the close as close to the extreme low as possible. The close in the lower 1/3, it shows a high momentum candle. Now a close in the middle 1/3 shows more of a neutral candle, and then a close in the upper 1/3 shows a weak candle. Now let's talk about this story here. So if the bears can close this candle near the extreme low of where they once traded at within this session, it would show a strong signal for bearish momentum and potential bearish momentum to continue. All right, y'all, time for a pop quiz. So question number 1. In a bullish candle, the closer the close is to the extreme high is a signal for weakness or for strength. Question number 2. In a bearish candle, if the close is in the upper 1/3, what type of signal does that give us for the sellers? All right, now let's get on the price chart and go over a couple examples of both of these. All right, everybody, so what I want to do now is get on this price chart here, talk about this bearish move, and kind of show some of the clues that it gives us based on reading the price action. So let's start from the top. So as you can see, we've got some pretty good momentum, right? How do we know that in this candle? 1, the body's pretty big. And then 2, if I broke it up into thirds, here's a third, here's a third. We close in that lower 1/3, showing me strong momentum, right? Now let's move on to the second candle. We see a little bit of a loss of momentum based off the size of the bodies, but we have extra confirmation that the momentum could continue because of this close, once again, in the lower 1/3, right? Same thing here. Another close within that lower 1/3 shows a strong momentum, and then boom. Here's our first signal for a lost momentum. And how do we know that? Let's talk about the story. So we see price opened up here where the bulls tried to push price up. The bears then went to push price back down before the bulls came back into the market, closing price right here in the middle 1/3, right? So we had 3 candles in a row that closed in the lower 1/3, showing strong momentum. Then we have a smaller body and a close in the middle 1/3, right? Showing us a more of a neutral candle or a lost momentum in this case. And what do we notice looking left? This all happened right here at a level of support, right? And what do we know? At a level of support, it's where buyers like to hang out. So there's no coincidence here that we see a lost momentum within this zone, right? But what do we notice happens next? So after this candle here, we followed back through to the downside, breaking through that level of support, and then continue down. Here's another high momentum, strong candle. And how do we know that? 2 reasons. 1, notice this wick to the upside. What this wick shows us is that the bulls tried to push price back up for once again getting shut back down, pushing price lower, and then once again closing near that extreme low or that lower 1/3, right? But what do we notice happens down here? If I was to break this candle up into thirds, let's just do it now. I would say here's a third, here's a third. And notice where the close is, right? The close is now in the middle 1/3, showing us more of a neutral candle. So we had strong momentum all the way down, except for here. The momentum then continued, and then boom, we see our first signal once again for a lost momentum. And now let's talk about this next candle next to it. What do we have here? Let's do the same thing. Let's just break it up into thirds. So I would say here's a third, and here's a third. And so notice this close, right? This close now is in that upper 1/3, showing us we went from a neutral candlestick to more of a weak momentum candlestick. And as you can see, the bulls tried to push price up here. They failed, but then began to see some exhaustion down here. And how do we know? Once again, the wicks, right? The wicks. exhaustion, 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 and then boom, we pop to the upside, right? So all I did was read the story here of the close in relation to the extreme low, the close in relation to the extreme low, the close in relation to the extreme low, right? That's how I could tell we had some strong momentum. We had a little bit of a pause. The momentum continued, and then we began to slow down here, right? We began to slow down and then flip back up to the upside. So you don't need a bunch of indicators. You don't need a bunch of crazy tools. Train your eyes, read the price section. It'll tell you everything you need to do. All right, y'all, so the homework for you guys now is to get on the price chart and try to find 100 different moves. And what I want you to do is I want you to read the price action. Read the price action as far as the close in relation to the extreme high or the close in relation to the extreme low, and try to tell if you think the move is going to continue or potentially reverse based on just the price action reading alone. I can guarantee you this will help. Best of luck to you guys. As always, reach out if you got questions. All right, everybody, so what you just saw was a clip from an upcoming trading academy that should be coming out within a few weeks. That was a clip from the sophomore year, and the theme of the sophomore year is all about reading price action and understanding the story that each candlestick tells us, right? So I wanted to post that now. Can you get y'all's feedback on what you guys thought, not only of the speed of it, but of the background music and then the style with the intro stuff as far as the words, me talking, and then going on the price chart. I wanted to know if that kind of made a better comparison or if you guys would rather have more time on the price chart, stuff like that. So I would appreciate the feedback. Let me know what you guys think. Also, if you've not yet downloaded my free entry playbook, it is in the link down below at www.bishcapital.com. So feel free to grab one and let me know what you guys think. Give me some feedback on that as well. But now what I'm going to do is I'm going to get on the price chart and talk about the number one trading opportunity that's on my radar for this upcoming week, which is now the third week in February. So I hope you guys enjoy. As always, feel free to hit the like button, leave a comment, or subscribe to the channel if you want to. With that being said, I'll see you on the rest of the video. All right, everybody, welcome to my Sunday best. And what I want to do here is break down the Aussie dollar on the daily time frame. So daily time frame, first thing that I see is a break above structure resistance, right? And that's what we want to do on this higher time frame, which for me is the daily time frame. I want to create my bias. And what I'm seeing is a break above structure resistance, right? Which tells me I want to align myself for a bullish continuation-based move. So I'm going to drop down to the 4-hour time frame now with that bullish mindset. Now, it's not the cleanest, but there is something going on here. Here's that left shoulder, here's the head, and here is this right shoulder over here, right? If you want me to draw it out, here's a swing high, low, right there, 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 and then now we've got that red light breaker structure, right? So we've since had this red light breaker structure, right? And the way I love this setup is because of this. All I gotta do is just increase this like this. And now what I'm gonna tell myself is all I wanna see is a yellow light based pullback into this area, right? I don't care for the price action reason. All I wanna see is some type of bullish reason to get long and look for that continuation to the upside, right? I wanna look for that continuation to the upside. Targets come off the top and then roll into extended targets. But let's talk about why I like this zone here, because what do we have at the bottom of this zone? At the bottom of this zone here, we have a level of support, right? Let me just delete this, make it a little bit cleaner. We have a level of support. And if I anticipate price to come down in this area, let's say I get entry right in here. If I'm looking for a bullish move, right, then I don't want to see this level broken. I want to see this level of support or this floor hold up. So now, what does this allow me to do with my stop loss? It allows me to have my stop loss in a safer place, right, below these lows. So it's below where I'd anticipate the buying pressure to once again come back into the market. So in my opinion, it gives me a little bit of a safer stop, as well as I'm in line with my higher time frame bias created on that daily time frame, right? So this inverse head and shoulders pattern is my continuation pattern to my daily break above resistance, right? Now, all I need to see is this buyer's relief, where we see this pullback, and then any type of bullish price action entry to look long. So we'll see what happens. Hope you guys enjoyed. Once again, as always, feel free to hit the like button, leave a comment, or subscribe if you want to. I'd appreciate your guys' feedback. So best luck to you guys.